Okay, as we do every Sunday, let's review last week's battle plan trades. The purpose of the battle plan is where do we want to go long? Where do we want to go short? Great bulls know where the bears are and great bears know where the bulls are. And that's what we're trying to do when we craft out these battle plans the night before. So on Sunday, we crafted out the battle plans, and this was the long that activated. And if you watch the AM briefing for Monday, we dissect this trade a little bit and just how gorgeous it was with our strong levels. If you happen to be in London or an international member, or you're up really early, you could have had a 50 to 70 pointer on that move. Absolutely beautiful. Then Monday night, I outlined longs and shorts. It's rare that I outline shorts. It's about 90% longs, 10% shorts. But when I outline the shorts, they're usually really good. When we were live on Tuesday morning for the CPI candle, you'll know we got short here and I captured a 30-point move here when we were live on YouTube and Zoom. We also had mapped out this long here that we took, and that was beautiful. Now, from this short, if you kept a single runner back, you were in that trade for a couple days if you were in the right type of account that allows you to do that. You could have captured a 100-pointer, but when I outlined that short, I gave the exact location that I believe that you should take a profit with your lotto runner, and it was an 80-something point move. Absolutely beautiful. That was the trade of the week, which was that short. Then Tuesday afternoon, I published another set of battle plan trades. When we opened up in the RTH, we were looking to get long here, and this was the right location to be looking for a long. It was not the easiest trading conditions to be long, but when we went live on Zoom on Thursday, we broke down this area where you could have gotten long with a 3-contract system. Had you been willing to do that, you could have had another 50 to 70 pointer on that move. But the good thing is we were looking for the right trade in the right trade location. We weren't calling for shorts here. We were calling for longs. We weren't calling for longs up here. We were looking for shorts. And once again, the purpose of the battle plan, where on the chart are we looking to go short and where are we looking to go long? And then Wednesday night, mapped out another set of trades. Nothing activated. It is what it is. You should have been long, in all honesty, from this long here. Holding. Should have been long is the wrong word, and I apologize. That was the right location to be looking to get long and holding a runner. If you were in it, great. If not, you're simply waiting for the next high probability trade around the corner. Then Thursday, we mapped out a new set of battle plan trades, and we were also live on Friday. So make sure you like, subscribe, hit that notification bell, because I do a couple surprise pop-up live streams throughout the week. If you were with us on YouTube or Zoom, you know we were looking to drop into this zone here and to get long, and that was just absolutely gorgeous. So the purpose of that battle plan is where do we want to go short? Where do we want to go long? Not hindsight, it's mapped out the night before. And of course, it's free every Monday because we go live on Tuesday. So make sure Monday nights you're checking out that battle plan if you're not a member. So let's draw out the weekly candle. We have the Sunday opening here. We have Friday's close. And then you have this wick that comes up to the high. You have this wick that comes down to the low. Basically a doji on a weekly candle. Looking for longs down here and shorts up here. And that's how we trade at microstrader.com. All right, let's talk about this daily trend line. Well, at one point, the daily trend line was like this. Then it gets adopted, it gets adopted, it gets adopted. And you're wanting to find that area where the price just keeps bouncing off of it that offers some sort of diagonal support. You can see this first move off of there had a certain distance to it. Came back, did a smaller bounce. Came back, did a smaller bounce. Came back, did a smaller bounce. So as you can tell, ES and SPX, same trend line, is vulnerable here. There's a lot of vulnerability here to having a really strong move to the downside and breaking this trend line. We see it over and over in horizontal supports. It bounces the first time, has a big bounce. Less of a bounce the next touch, less of a bounce the next touch, less of a bounce the next touch, and then boom, it drops like a rock. And that's what ES does. It drops hard and then it ladder back. It drops hard, it ladders back, right? And the ladder back is beautiful. That's typically where I'm focusing my trading on. I don't care if I miss the drop. Couldn't care less. ES is an upwardly moving instrument over time, and every month people are putting their money into their retirement accounts, which is buying more S&P 500. If I'm in the vomit, cool. But you've got to be careful that that heroin hit that you're getting doesn't start to dominate your trading all the time, where you want that heroin hit again. You want to be in that massive drop. You keep shorting an upwardly moving asset, and you're like, I'm not making any progress. So careful if this thing does vomit, that we are in this short. It could be a multi-day short if we lose this level, but I have no clue if that's going to happen. But I will say we're not going to stay in this tiny little range for long. We know that. Is it going to go to the north? I don't know. That's the direction we tend to be going. Are we going to go to the south? I don't know. Everyone seems to be predicting doomsday coming Tuesday, so be careful listening to the prognosticators and soothsayers of the ES. We're going to trade the levels as they develop. After we open, and if we gap down because of Trump's tariffs, or if we bomb Iran, we will look at the chart again with a fresh set of eyes. There's nothing wrong with saying, you know what, this is a shortened week. Maybe we have a monster gap down. Who knows, a monster gap up on Tuesday. And you go, you know what, I'm not going to trade the day after a federal holiday. I'm not going to trade after a big gap. I'm just going to wait. It's no big deal. You don't have to trade Tuesday or Wednesday. You don't have to do that. So make sure that you don't feel the need and the rush to get into a trade early this week. We can set back and wait and let this thing play out, and we will continue to map our trades. And if you wanted the safest trades, wait for those battle plan entries, in my humble opinion. Okay, so now let's make sure we have marked the most important levels going into next week. Now, I'm going to throw out a challenge to my own members since Monday is a holiday. From Monday to Friday, where was the best 30-minute front side trade? Post it on the trading floor. Use the little, it looks like an eyeball where you can hide your image so other people can't see the image until they click it. But where was the best 30-minute front side trade of the week? Okay, so let me turn on my session levels. These are the levels I have marked out for the week. We had this London high and the all-time high. You could also put weekly high, but the important thing to note here is it's an all-time high and a London high. It makes it a double magnet because the all-time high was done in the overnight session. We have this IB high here, this RTH high, the overnight high, which was also the London high, the IB high from Friday, the RTH low from Friday, the Asia low, and then the overnight low was done in the maintenance period. So I added that comment there. We have the RTH low and the weekly low there. You want to pause the video here? You can. If you want to screenshot this as well, go ahead and do that. Now let's bring up the single prints and VPOCs. So from Wednesday, we have a VPOC here at 69.43. And from Tuesday, actually, I'm wrong. From Thursday, we got another VPOC here at 70.10. Make sure you mark those. Then you have the beginning of C period single prints here, if you want to mark out those single prints. And you also have the remainder of the single prints from the A period here. And why do I say remainder? Because this RTH session took some of them back. So originally it would have been, the line would have been here, but on Thursday it took back some of the single prints, but not all of them. So this is the remainder. And if you wanted to change that from the beginning to the word remainder, I actually think I like that better, because that'll be a visual, or yes, a visual and a textual reminder that it's the remainder of the A period, not the full set of single prints from that A period. So there's the single prints and VPOCs. Now let's zoom out for the past 2 weeks. Here is 1 week and here is the second week. Let's throw on a fixed range volume profile here for the last 2 weeks. I want you to note where POC is right here about 69.87. If you wanted to add that level to your chart, the value area high is 70.12, 70.13, somewhere in here. The value area low is 69.58. If you wanted to add that to your chart as well. Basically, these are the boundaries. 70% of the price action occurred within these two numbers. And this is just the middle. Don't diddle in the middle. If you're looking for an edge, the value area low and the value area high at 70.13 and 69.58 would start to represent the edge of the last 2 weeks volume profile. And so now for a couple maintenance items. Remember, Monday is Martin Luther King. It is a federal holiday. We will not be live on Zoom. And the battle plan will not be published until sometime on Monday, okay? And that'll be for Monday night and Tuesday. So I'm very interested to see how we gap up or gap down. So I might be a little flexible on when that is actually published.